The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. That is I, the koala bear of Wall Street. And it is, as always, an interesting day in the markets, like the Chinese, what do they say? The Chinese curse. You must live in interesting times. And we certainly do. Market's been down, it's been up, and now it's up about 2.5 points or so at 1870. The real decision is going to be below that 1868, where we normally see volume really come in. And again, I forgot to introduce myself. I am Dave White, the koala bear of Wall Street, the downy soft trader. And yeah, it's just a nice squeezably, just a big fuzzball out here. We'll have a good time today, but certainly seeing a market that is giving everybody what they want. If they're a bull or a bear, there's a little bit of everything for everyone. But I have to say that this is one of the more interesting options expiration cycle days. On these days, the Wednesday, the week before expiration, option market makers have the big ton of options that are getting ready to expire. So what do? They buy and sell shares of stock, and they try to move the market around and push out and pull back in a great deal of different kinds of stock, so that they can get to the point where any movement really doesn't change the amount of money that they've made to this point. Most of these options have been out here for 60 or 90 days. In the last 7 trading days, the volatility is so huge, the risk is so huge that they want to basically lay those bets off, and they do. And what we are seeing is that today. So I've got just a little bit of house cleaning to do. I'm going to check, see if we can try something here. What is it? I can't remember it right now. I was trying to log into something here, and I'm not going to get it here until the break, where I can actually look it up. But I was going to check out here. Okay, so what do we have going on today? Well, we like to start off the show a little bit with history, because, of course, if you don't know your history, you're doomed to relive it. On this day in 1825, one of the earliest buying frenzy for American IPOs reported. As the Bank of Southwark goes public in Philadelphia, investors hire muscular goons to sign their names to the subscription books that confer the right to buy shares. Noses were smashed, hats were jammed in, and the police court was busy for weeks with the wounded after it. With the Alibaba getting ready to go public, I guess since we're not all standing on the steps of the New York Stock Exchange, or in that time frame, 1825 at the Philadelphia Stock Exchange, not a lot of hats being jammed in. In fact, most people not wearing hats anymore. And that's probably why that band Men Without Hats was formed. Probably figured out that the hats were probably going away. But an interesting time, but the frenzy to make money knows no bounds, nor any age or year. But it is interesting. And this day in 1946 also, Sony was started. And I think just a year after the end of Japan's imperial leadership was over, they were already starting to create Sony. Sony had heard about a new thing called a transistor, and they were very interested to start getting involved in making small radios for the general public. If I remember right, during the Imperial Japan, while there were radios, all the radio stations were basically run by the government. No one cared to listen to them. They were all phony, worthless to listen to. So not a lot happened out here. Of course, we were talking about the Alibaba IPO. And what can you say? They are talking about a sliver deal. And by a sliver deal, I've talked about this before. And it is when, let's say a company theoretically would be worth $50 billion if all the shares were going to market all at once. Now, most companies don't dole out all the shares at once. They'll dole out 10, 20, 30, 50%, and leave the rest on the shelf, as it were, for stock options and later on if they need more cash. Those are called shelf filings. My third message that they have not returned, I asked them point blank, is there going to be any special consideration for Alibaba coming out the door? And by special consideration, I mean, will they have to have the exact same requirements for filing that any other company? Well, I called a couple of weeks ago, no response. Called again yesterday, told them I was with Tiger Financial News Network. For all I know, they don't have any idea, thinking that I'm just one more reporter out here. So they really would know. Maybe they looked me up on Google, but I doubt it. My guess is that they heard the question and decided to run. So what else can you say? Anyway, this is going to be a weird IPO. How this all kind of works out is going to be problematic at best. But already starting to see some of the ramifications of this. We've got a lot of companies that have reported. Most of these companies have done rather poorly. There's a handful of companies. In fact, last night, the two companies that did well, really well, last night were video game companies. The rest were pretty horrible. We'll go through those today. But the other thing this morning is we had a bunch of energy companies come out. Of course, everybody's flooding into the energy sector. We talked about huge call buying yesterday, and I suspect that has continued a little bit into today. But we're going to have to see how the market closes out here. We're up 4.5 points at 1872. And I think for the bulls, anything above the 1868 would be a victory after we went and penetrated that level, which I called yesterday the line of death, the red line. But, of course, it pretty much respected the red line and the line of death about as much as the Syrians took our red line and basically just kind of smooshed it all over the desert there. Said, I don't see any line. So I don't know. It's one of these things where we continue to see a market where as soon as we go positive on the day, all the volume stops. It's light. We've got 2.3 billion shares as we go into the first commercial break. But we will be watching this throughout the day. But again, it's going to a lot be about how this market closes. Very tough right now. I see not a lot of push in some of these bigger companies to go positive. Apple's off $3.50. IBM's basically flat after being down about $3. But we'll continue to watch some of these. And of course, yesterday we talked about the XLE. Of course, on earning, everybody decided to, I guess, pile on in this, or just the companies going up did. And of course, you had a couple of dojis out here, and really. What you wanted to see was a huge volume out here today, and we are not getting it. It's 5.8 million shares. With all those companies reporting out here today, you should see a lot going on. We do not see it, so keep an eye on it. But you should see a huge sign of strength. When we come back, we're going to go to Frank in Baton Rouge. So hang on, Frank. We'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back with Frank in Baton Rouge. How are you doing today, Frank?
I'm doing fine, David. Thanks for taking my call. I was wondering if you could look at ATVI Activision for a short position.
For a short?
Yes.
Ooh.
Like chart that gap up today is not a.
Yeah. Where do you thinking this thing's going to?
Oh, I was wanting to fill that gap for starters.
Yeah, so you're going to play it for $2 down?
Well, to 19 potentially. And also it has the gap going back all the way to 17 too.
Yeah, okay. No, I just normally, there's two things that I have rules for, and this would violate at least one or if not both of them.
What are those?
I don't short stocks if I can help it under $30. There is a reason for it, and that is the volatility is normally too high on these to do that. That means that what if they get bought out? Someone starts a rumor. It's easy to move these things $2, right? As a percentage basis, it's a lot. $100 stock, move it $2, no big deal. You're 2% off. Right? But normally, you've got the law of large numbers working for you for stocks that are expensive. You've got the law of large numbers working against you on stocks that don't have high numbers. See what I'm saying?
Right. What do you think that? What's concerning me now is volume. Is this is a pretty big bar, and it's got a lot of volume now moving in on it too.
I tell you what, of the sectors that actually did well last night, it was video games. And to me, they're just going to do better over the next year. They've got new consoles coming out, both the PS, whatever it is, PS3 now, and the Xbox One. These companies are making and do have, especially, I know Activision fairly well along with Electronic Arts last night, but both, I didn't look at Electronic Arts yet today. I guess part of my problem would be also the fundamental version of it. Both these companies are coming into a supply line, so they may come back and fill these up. But I have a feeling that there's a lot of other stocks out here that are looking to get hit a lot more than this particular sector. So that would be the other thing is the sector's fairly strong. It's not weak. Both these stocks gapped up last night on very good earnings. Now, they do all, I think Electronic Arts is the one that's got a huge supply line coming in. Go ahead.
The forward guidance on Activision, though, was down, though. Their forward guidance was...
I think it was for the quarter. But the problem is that these guys are going to... I think Activision's going to spend $500 million on their next game. And that takes like a year and a half to work through. So these things aren't as lumpy as you would... the earnings are lumpy, but when they ship something, they ship... I think the last game they came out with, they spent $250 million to get it out of the door. And when it went out the door, they sold $1 billion of it the first week. And that is the problem. This stock doesn't move, like a heartbeat monitor when the actual games go out. But I tell you what, this sector is probably one of the strongest sectors out here. That would be one of the other reasons why I probably wouldn't be looking at this sector to short it. But
do you think the gap from 17 will be filled?
I think it will. You need the market to truly fail out here. In fact, I'm looking for it to 2, but it doesn't look like it's going to do it today. We're up 6 points, and it needs to close below 1868 to confirm the downside in this market. So we'll see what the end of today brings. But if we can't crack this market today, the chances are that it's probably at best going to go up a little bit in a week from Friday. So go ahead.
Also wanted you to look at IBM real quick. I need to thank you. I closed my position out last Friday when I called you on some options and made it a little better than double on them, kind of recovering some previous losses. But it's got a long candle today.
Yeah, it's I'm still short. I'm going to hold on to it for a while, but I've got into June, so I'm thinking this is going to slowly move down. So I'm going to hold it probably a lot longer than you are. But
with the strength coming in today.
Yeah, the chances of this thing probably breaking in the next couple of days. You had the options for next Friday, right?
Well, it would have been this Friday.
Yeah. So yeah, that's it's just a little tough. If you want to hang on, we're going to go to break, and we'll be back in just a minute. And we'll talk a little bit more about Activision and shorting very strong stocks. But there are a few stocks I don't want to short, and we'll talk about those when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back. Is Frank still there from Baton Rouge?
Yes, I'm here, David. Are
you offended, or am I racist for saying Baton Rouge that way?
No.
Okay.
It's perfectly okay. We've been told worse things.
Okay.
How far do you think IBM will bounce up before it resumes its downtrend? It has a long, pretty bullish candle today. If it closes at this range,
I think this thing's probably trapped in 190 to 192 for a while.
Yeah. So if I was looking for a re-entry point, we might get to 192, 192.50.
Yeah, it doesn't look too much like me. To me, this looks more like an issue with options expiration than a whole lot else. So I would say that, you might, I'm going to hang on to it for a while, but I think you can probably wait for a bounce and hit it again. But the big thing is going to be take some time with it. Don't expect this thing to roll over. It's not, you don't have anything in the way of earnings or anything else. It's going to be more of a market event. If this is right here.
If you look at the bars, though, over the past 7 days, 8 days of trading, they're declining pretty heavily. The rally of about 8 days ago had 3 up bars, and it was on a declining volume. And then the correction was on even further declining volume. I was thinking it had a little more steam in it, maybe.
No, this is mostly all about the Dow. This is everybody's piling in the last few stocks as the market goes high. They're all crowding into energy right now. They're all crowding into a handful of Dow stocks. I mean, we were up 2 points on the S&P cash. We were up 85 on the Dow. And what's that tell you? Everybody's crowding into the last of the safe stocks that they can find. And there's not a whole lot of breadth in the leadership of this market. And can they hold it up? Yes, but it's not like any of the usual suspect out here. Apple's still off $3. I mean, Apple's basically flat on the day. I mean, IBM's flat on the day. When you look at the IBE, it's still off $3. There's nothing out here that's really jazzing anything. In fact, we could have some kind of huge move before the end of the day. But 2.4 billion shares out here. We've gone back and went lower again today with some decent volume. And of course, you get into this afternoon and the volume just dies. Anytime you try to push the market higher. So I'm more willing to sit on my hands and let the market go. I've got one position in all the stuff I've got that's giving me fits. The other stuff all looks like it's profitable. So I'm not going to worry about it too much right now. But the problem is that you just wake up one day and the market's down 50 points because that's the way this thing's set up. Now, could it be up 10 points tomorrow? There's probably 80% chance it's up tomorrow. 5 points or 10 points during the day or something like that. But there's also that 20% chance it's down 50. And
do you think we'll make the run for the highs?
I don't think so. I just don't see where the energy is going to come from. You just can't get, like I said, a lot of these things do not have any kind of energy. And why some of these things have gone lower, I've seen a lot of stocks that were hit going lower today again and not recovering on any of this huge quote bounce. And that's why I'm saying I think this market is extremely thin. Now, can they hold us out for another 7 days? Maybe. And the question is whether or not we get the bad news. Putin invades Ukraine, so I'm thinking, could we go up to 1885, 1886? Yeah. And probably an 80% chance of that. The problem is there's also that 20% chance you wake up and you're deep in the grease 50 points down on S&P cash. And that's the problem is you've got that 1 in 5 chance, and people have been, looking at it forever and saying now, basically with the levels of volatility, that it just can't happen. And that's normally when you get a boot in the face. And I normally just want to be on the asymmetric side of the bet. And that means that you probably lose a little bit more often, but at the end you make more money. So I'm willing to sit on my hands here for a little while and not take the short cash if I can avoid it. I'll probably have to maybe get out of 1 or 2 of these positions in the next week. But I'm willing to take that risk, the small risk up, compared to the huge risk down, at least in my opinion.
I agree. Do you think gold and silver will survive a correction, a market correction? I
think there's a good chance that we see 1,200 or 1,180 again on gold. Certainly didn't react to Mrs. Yellen's today saying that it's QE and low interest rates forever. So, it's I didn't see, what is it trading at right now? So I go back and look. Yeah, it's off, off almost $18. Now, you're in this trading range up here. What really happens, this thing is, if it breaks about to 1272, you're probably looking at 1180. So, right. Yeah, I mean, that's the problem with being in this market here, is that you get a few more of those things where low interest rates forever, we're going to accommodate forever, which is just opposite of what Ben Bernanke said yesterday. Ben came out and said he was looking at if she was smart, she'd start looking at those higher interest rates now. And, of course, she comes out today, we'll do it forever. But there's a reason why Obama canned him and put her in, and that is that she's going to be very accommodative for him for his last 2 years in office, which is what he wanted. He got, I think he got the air that Ben was looking at raising rates and talking about it and ending the QE, and he didn't want any of it. And
I think that's their plan, though, is to give both sides hope, Bulls and the Bears.
Yeah, the problem is that she's pretty much outgunned. She's going to have two more hawks up against her for her segment, and the question is whether or not they're going to all bow to the very dovish wing of the Fed. My guess is that they are doing everything they can to prepare us for higher interest rates come January or February next year. That's my belief right now. I know last year when everybody told me I was all wet because I said that QE was going to start ending, and no, it's not going to happen. No way. And, of course, it happened pretty much exactly when I expected it to. So I don't know if you can interpolate that since I was right the last time, I'll be right this time. But I think that's what we're looking at, and why this market is having such conniption fits at this level. We're in that range of looking forward 6 to 9 months, as the market often does, and it just can't get any juice to the upside because it knows or looks at what it sees, and it is not. It's not all that great.
Yeah. Well, David, I do very much appreciate your time. And lastly, I wanted to say that I listened to Tom's show, and bonds have definitely shown to be a safe haven or a rotation. So I think they're foretelling maybe what the market's going to be doing on a longer-term basis.
Yeah, I don't know. Do you know who Joe Granville is?
Granville?
Yeah.
Was he the one that does the ABC?
No, he was a guy that was right once in 1980 and called a market correction. Market fell about 25% in a few days. He had a big newsletter. Basically lost 99% of his money in the next 9 years because he kept on predicting the end of the world. And that's why most people that sell newsletters basically talk about the end of the world. It's an easy way to sell a lot of newsletters. But he wasn't. He's like a stop clock. Not everything he said was wrong. But one of the theories that he espoused was the Titanic theory, and that is the front of the Titanic goes down. What does everybody do? They run to the back of the Titanic, but it's all going down. And I've told somebody this in 2007 before everything was blowing up, and this guy was looking at gold and some other stuff. It was a guy in my Corvette club. And I said, well, that's, what they say is beware when everybody runs to the stern of the Titanic, because the whole ship is going down eventually. And, basically on this whole bond thing, I suspect that the whole thing of looking for a safe haven means that it's probably not safe. Everybody else is there too. You're going to end up with less than nothing. It's normally the opposite side of that trade. If you can be on the right side of it, where you're going to make the right money. And my guess is that that's probably, this thing looks to me, like you could have a fairly decent ABC down in this thing. And, you got a nice move at least in the TLT. So, but I think we're probably going to get some fireworks before the end of the year. In the bond market, it's going to fall over in the actual market too. But, just the whole thing of the dollar fading here and the gold fading with it and everything else. Looks like we've got a lot of stuff coming out here in the next few weeks.
Okay. Well, David, I'm going to let you go, but I very much appreciate your time, and I'm going to be starting your newsletter soon.
Cool. Thank you very much.
Bye-bye.
Okay, and what do we got? Okay. Mr. Basil in the den says, was in the 70s, was outstanding. Yeah. I was in the, he used to walk into my store. So I've met him several times when I was selling computers. He lived in my town, and I met him several times. So I wasn't that much into the market at that time, but he was a pretty big hot dog in the early 80s. When I used to bump into him. So he's no stranger to me, old George Granville, but he doom and gloom does sell, and he was all about selling his newsletters. He was able to start a panic on Wall Street with his newsletter at one time, but like I said, pretty much in the next 7 years, just blew up and blew up most of his traders that were following him. So it was very interesting. We heard a lot about him because I lived in the same city he was. So it was always interesting. Didn't know he played piano. Didn't know that he liked electronics because he was always coming in. Okay. What else do we have? We were looking. Somebody in the den posted this, and I thought I'd go ahead and follow up on it. And he said, basically, solar stocks kind of getting hit today. And the reason why is most of these solar stocks are starting to guide down. There is a reason, and that is that almost all the subsidies in these solar companies are going to go away in 2017. In a deal made in hell, of course, these companies were right to take it. They basically had a deal that said that basically from about 2010, the United States government's going to give you a ton of cash, and you're going to give it back, maybe 25% of it, back to the politicians that give you all this cash and all these huge subsidies. Well, those subsidies kind of tailing off. And, of course, with what is going to happen most likely in the Senate this fall, the chances of getting any of those subsidies back probably slim or none. My guess is 0, since the opposition is going to probably be in power. Certainly they're not going to get it through the House, so it really doesn't matter anymore. But it is a political issue as far as I can tell. None of these companies truly made any money. It's all about subsidies. It's like Tesla, 80% subsidy in Norway, where they sell a ton of cars for Tesla. Same thing for solar. A lot of these deals where you put solar on your house, all your neighbors are really paying for it. It's not like it is so cheap that anybody else makes any money off of it. Probably smart to do it on your house and let all your neighbors kick in. But these things are not money-making deals. And, of course, what we do see is for solar coming back into its huge candle. But what they're saying is they see the writing on the wall, and they are guiding their EPS down in the future. And basically all these other companies are. Of course, these companies all had a huge run, especially when Germany was just printing money left and right to solarize their country, because it was all the trendy thing to do. I live here down in Florida, where you see the remnants of the 1970s hot water heaters on the roof, all in disrepair as you drive down a lot of the major thoroughfares of Tampa. But not a whole lot different there. I don't expect a great deal in the long term. In the short term, these things are probably going to hang up here. But as the subsidies in these companies fade away and drop off, and, of course, the whole thing where you're getting 3 or 4 times the cost of production for electricity for putting it back into the grid, all that kind of stuff probably going away. It was normally, if the government does something like this, the correct way to do it is to find somebody that can actually make these things pay off right now and be market sellers. And the only reason they have a market is the government's pushing it out. So I'm not real bullish on these solar companies long term, and they are not telling everybody that their EPSs are going to be down. Anyway, look for this thing to go into the bottom of this huge candle from the 19th of March. Be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The diagnostic box spread analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we finish the show out here in the last segment, what are we up? points on the S&P cash, 2.55 billion shares. So pretty much the same thing. We get in late into the day, and there's just not a lot happening. Of course, some of these other stocks moving. I had a few that I wanted to get into. We talked about Yahoo, AOL, another one of these companies, and it couldn't happen to a better person. AOL absolutely being spanked like a redheaded child today. I always wondered if all of this up here wasn't just a mirage, and when I'm talking about all this is the move above $36. The reason why is there's just nothing to explain all the quote earnings that were up here, and I was wondering when the music would stop on this. The CEO is got to be one of the biggest widgets in tools in the world. This guy regularly treats his employees and other people around him horribly. He's had to basically apologize several times, but I always thought he was kind of a you see some people and kind of the hair stands up on the back of your neck. He's just kind of a slimy dude, as far as I could tell. All bravado and maybe special accounting. I don't know how all this thing at the top happened. For a company that relies on dial-up customers, they're mostly dropping off the planet and assuming room temperature because they're so old. It's hard to figure out how this company ever went through the stopping phase. Now, there's always things you can do in accounting to come back and do that. Of course, as William Buffett says, you can always, when the tide goes out, you can always see who is swimming without a bathing suit. And the question is, when the tide is going out here now, are we really seeing the truth here as this thing plummets back down on massive volume? And where can you see this thing going to? Well, certainly it's back down to these previous lows before this huge run up. But, 32.21, there's two lows there. So it's about a dime below to those lows. So basically everybody pretty much wiped out in trading out here, but not surprising to me anyway. I just never could understand where all the money was supposedly come to, and it's interesting. Of course, this is a Wednesday. This is a options expiration day, so it is a day to expect the unexpected, and you got a kind of a market that's a little all over the place out here. And what can you say? It's hard to say. Anyway, we've got some stocks that I'm short that I'm in for the long term. One was down $10 or so. It was up $2 higher early in the day. It's lost all that, or at least in the morning. So we got kind of a bifurcated market where it's kind of hard to see exactly what's going on in the day. Of course, you're up 12 cents on the dollar index. The question is whether or not this lower dollar will hold. And to say the truth, that's probably the cloudiest part of this entire market. And that is, are they really working to get the dollar down once again and try to encourage exports here in the United States? And what is that going to do to the rest of the marketplace as they do it? But to me, this latest break below 80 is very troubling, and I'm wondering if all this rush to bonds is just a reaction to what they see, as the previous caller talked about. Anyway, we'll see you tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.